Energy ETF XLE down slightly this morning. Continuing OPEC cuts are supporting energy prices lately, despite the sector pulling back from 4-month highs on concerns over economic growth and trade turmoil. We are joined now by Francisco Blanch, Bank of America's head of global commodities research. Francisco, we've had this tremendous comeback in the price of oil back in bull market off the lows of last year. Where do we go next?
Well, I wouldn't say we're in a full-blown bull market. And again, thank you for having me once again. But I'd say we're going to go higher, maybe another $5, $10 a barrel higher from here for both WTI and Brent. But I do think it's important to understand that this is spot-driven. And as you pointed out, is the spot price rising, not so much the forward prices for oil. And it's very much a function of OPEC cutting supply back this year pretty dramatically, coupled with Venezuelan production collapsing and Iran production also likely to be further reduced on tighter sanctions starting in May. So we've gone from a rate of growth of supply growth of 2.5% last year to just simply 0.5% growth. And another factor I think is important is that shale producers are finally exercising more capital discipline. So you basically have supply being curtailed across all fronts, Iran, Venezuela, Saudi, Russia, and the rate of supply growth is also being curtailed back here in America because of the lower prices that we had 2 months ago.
I mean, it's already up 39%. That is WTI crude oil from the lows.
Right.
What about those concerns about demand and where they'll take us next? Global economy, trade, FedEx warnings like we got last night.
Right. I mean, look, those concerns on demand are fair, and we are worried about those. But remember, consumer confidence around the world is still pretty strong, even in countries where, like Mexico, where industrial confidence or corporate confidence is very low. So I think that consumers will keep burning the fuel, and we are seeing very strong global air traffic demand for passengers. Freight is a little bit weaker. So I think to your point, one of the key crucial events over next month or so from a demand standpoint is going to be the U.S.-China trade deal. If that situation resolves itself and the U.S. and China are back to amicable trade terms, we're going to see a very sizable rebound in demand for freight, both air freight, road freight, sea transport. So I'm actually positive on oil heading into the summer, particularly if we get that trade deal behind us. Obviously, if it doesn't happen, that's a separate story, and I think the risk of recession definitely rises if there is a breakout between the U.S. and China on trade.